Okay, guys. A little bit of Ask Scruff in Trader Clinic, and if you bear with me, we'll flick it over and we'll have a quick look to see what it is. It's quite an interesting question from Paul, so a little salute to you, kid. Newbie question, so forgive me. There's nothing to forgive. If you don't know, you don't know. If you're looking for something, just ask. Don't matter. And if I have to say it 1,000 times, hold on a second, what she just wrote on there? I bet it may not be one of your rude things again.
It's not.
Sex better be good.
Oh, okay.
Yeah, what? What is? See, and you all think it's me with the mucky mind. It's not. It's bloody her.
Yeah.
Yes, it will be good. Always is.
Oh, listen to you, you big head.
Well, no, you just have to turn up, and then it's good. I was having a moment there. Forgot what I was saying. Okay. Newbie question, forgive me. Nothing to forgive. Remember, boys and girls, nothing scripted in here. And as you can see, it definitely fucking isn't. Jesus Christ. Working your way through Where the Scruff. Where the Scruff is an excellent framework to give you an understanding of how the markets operate, what you look for to get in, how to target effectively, etc., etc. And what you're asking about is not so much a technical question. It's more a common sense question. So as you go down, it says, would you advise concentrating on 3 pairs or look at the strength sheet, etc.? Which is the right, wrong way to go? Well, there isn't a right way, there's not a wrong way. It's just the way that you feel comfortable. Now, when I build a strength sheet on a morning for me, I'm not necessarily looking for it to pick a product. What I want it to do is tell me the state of the market. And if I'm tracking, say, the pound, I want to see where the pound is in relation to other currencies. Now, personally, you touched on something about looking at 3 products. As a beginner, that is probably the way forward, and look for something with correlation. So you look at gold as a barometer. Why gold? Because it's closely tied to the US dollar. So if there's a movement in the dollar or a movement in the gold, and you're tracking pound USD, that move will naturally gravitate into cable. Cable's a nickname of pound USD, by the way. And then have the FTSE. They are all linked together. Now, you could also just say, well, I like fast moving markets. And you picked on pound JPY. Pound JPY is a very quick market. It's a very good market. It's a bit expensive to get in. But because of the speed of movement, you can have a lower position size and have your target a little bit bigger because it will gravitate to it each time. That's why I use pound JPY on the small black bull account. What I'm doing with that is I'm applying leverage in order to open that so I can literally be in and out quick, because the thing with cable and the FTSE is they're good products, but it might take a little bit longer to get your target. And you want to be in the markets as least as possible when you've got a small account. So again, it comes back to common sense. So when you look at the sheet, that's what it's trying to do. It's trying to tell you the state of affairs. Now, there is other sections to it. It does pick out the strongest and the weakest. Now, if that happens to align with your chosen products, and we'll just say pound USD. Brilliant. You know it's in for a shot. If pound USD is not in there, there's a second section that just looks at the majors. Now, the majors move every single day. It doesn't matter what the strength is, but it'll highlight the best of that bunch. Again, if my cable is highlighted there, I know I'm on for a winner. And what I mean by that is decent targets. Targets is the key. If it doesn't show up, it doesn't mean that I'm not necessarily going to trade cable, because cable will give me a trade every day. What it tells me is it's still going to move, but it might be not moving aggressively, so I'll target appropriately. That's what it's all about. It's just about reading the state of the market. Now, the next part of this is getting used to a certain asset. Now, if you get used to a certain asset, you kind of get to know when it moves. Like cable moves pretty good between the hours of 7 in the morning to around 11 in the morning. Does really well. Then it dies off. Picks up a little bit again around 2 o'clock. And then it's dead again around 5. So there's a couple of time periods where it'll do really well. Pound JPY is pretty buoyant throughout the day from early morning through to mid-evening. The FTSE, it's only really pretty good between 8 and 4. After that, it's a bit... So again, watching the same product over and over can help you because you get used to it. Now, if you sort of take an approach of a chart as a chart, which I do, by the way, I genuinely do. You can trade any product and you can trade at any time. Doesn't matter. You can trade it on any time frame. Doesn't matter. Now, I kind of put that to the test with the minute videos I've been doing recently. Because everybody's, oh, show me the minute chart. I've got to know how the minute chart works. Well, you don't really, because each one of them was an hourly bias taken from a 15-minute trigger, but just watching 15 1-minute candles. That's all I was doing, but I was actually watching a 15-minute chart. So you can actually narrow field your vision too much. Always look at the bigger picture. So if you look at an hourly, I'll give you a bias of what the product's going to do. Check its ATR, see how far it'll move in a given hour. That'll tell you roughly what your target is. And then just drop down a time frame to see if there's a confluence on direction. In you go with a decent, reasonable reason to go in. That could be anything. You could use an RSI cross. You could use a Bollinger Band bounce. You can use a moving average cross. You can use a D marker, strength indicator. There's loads of them. Loads you can use, you know. But what do all these indicators have in common? Well, they're all lagging. They can only tell you where the price has come from. They can't tell you where it's going. That just comes from common sense. And common sense is targeting. So I started saying you should be targeting. I'll end it saying you should be targeting. Look at 3 products, 3 that move, that you are well aware of, that are moving when you're available. And then just apply common sense and look at an hourly bias, 15-minute trigger point, and then just monitor it. You'll be fine. Catch you soon.